Welcome to Understanding Your Credit Card Statement. Brought to you by Touch by Faith Financial Operations LLC. To help you with understanding your credit card statement, we will discuss the account summary, payment information, payment stub, and the transaction summary of your statement. In addition, we will show you how to pay your credit card the right way. Getting out of credit card debt isn't impossible. It simply takes knowing how to read your statement. It's important to know that every credit card has a billing cycle, which is the amount of time between bills. The due date is at least 20 to 23 days after the close of each billing cycle. What does this mean for you? Depending on your card terms of services, you won't be charged any interest on purchases if you pay your entire balance by the due date each month. The account summary shows an overview of the credit card account. You will see the previous balance, any new purchases, as well as the total amount of any payment received. You will be able to see your credit limit as well as any credit that you have used. The available credit reflects what's available when the statement was printed, so purchases made after the statement date will not show. The statement date is the most important date on your credit card statement, as this is the date your monthly payments will be based off of. Any fees or interest charges will be located in the account summary as well. The payment information section will show the new balance on your credit card as well as the date the payment is due and the minimum required amount. The time frame between when the statement closes and when the payment is due is called the grace period. If the balance is paid in full by the due date, depending on your terms of services, you can avoid paying any interest on purchases. The payment information section will also provide warnings on what happens if a payment is late and if only the minimum amount is paid. Let us take a look at the late payment warning. If you miss even one payment, not only will you have to pay an additional $35 for being late, but, going forward, all purchases will be subject to a new APR of 30%. You would continue to pay this 30% until you have made at least 6 on-time payments. Isn't it time to ask yourself, how much does a late payment actually cost me? Think about that the next time you swipe your card for a cup of coffee. The next warning box is about the minimum payment. In this example of a $5,000 balance, it would take 18 years to pay the balance completely off, and a total of $10,011 would have been paid. However, increasing the monthly payment by roughly $60 a month will allow you to pay the same balance off in just 3 years, while paying only $5,979 in total. Consider paying more than just the minimum due, as this will help to reduce your debt and save you money in the long run. What could you do with $4,000 saved up? The payment stub will provide the methods in which payment can be made, and for anyone who prefers to mail their payment in, the payment stub will give you everything you need. The transaction section shows all transactions for the account during the billing period, including payments and purchases. If there were any credits or refunds, they would be listed in this section as well. Now that you know how to read your credit card statement, let's talk about how to pay the bill each month. Remember that your payment history affects your credit score by 35% and credit utilization affects your score by 30%, which means a credit card affects 65% of your credit score. The first thing you want to do is locate your statement or closing date. This date starts your payment clock, which means you have 30 days from your statement date to make a payment before you are considered late. Once you have located your statement date, locate the balance and decide how much of the balance you want to pay off. Aim to pay it down to at least 10%, but if your finances don't allow for it, pay it down to at least 25%. The remaining balance should be paid before the due date, as any balance on the account after the due date would be subject to interest charges. Repeat each month. Now that you know how to read your credit card statement, you are one step closer to controlling your finances and living the life that you have always wanted. Here are a few things to remember. The statement date will determine when you make your payment, not the due date. Whenever possible, always pay more than the minimum amount due, as this will help you to get out of debt quicker and save money. Work on reducing your credit usage by 10% each month. You want to show you are responsible when using credit. Pay your bill in full each month by making 2 separate payments. You are not tricking the system, instead the first payment reduces the utilization that is reported to the bureaus, the lower the usage the better the score, and the second payment avoids any additional interest for carrying a balance. Your payment must be made before your due date. You have roughly 20 days between when your statement closes and when the payment is due. This is your grace period, and if payment is not made by the due date, you are late. Pay your bills on time. Depending on your current credit score, one late payment could cost you up to 110 points. Thank you for watching, and we hope this video helped you to better understand your credit card statement. Need help with another financial topic? Let us know how we can be of assistance. Don't forget to like the video and follow our Facebook page for daily tips and updates.